Last company we will present today is Valion, presented by Dennis Paulsen, CEO and co-founder. It's not far ago, or it's not long ago it went on the stock market, so it will be interesting to hear some points. But Dennis, will you go shortly through the company? We will go through some of the metrics. They are, as you know, because of history, a little bit less long than other companies, but that's how it is. And then we will return with the questions where we maybe can elaborate a little bit on future expectations. But Dennis, if you take it from here.
Yes, thank you so much. It's a pleasure to be here, and I'm really happy to be able to present Valia to the crowd. Valia, as you just said, Michael, came on the stock exchange in Copenhagen on Nasdaq in February. So we are just little over 3 months into our journey being a stock listed company. So that's a very exciting ride for us. Of course, there's a lot of things being a stock listed company that you can leverage as you go out and scale your SaaS business. If we take a look at Valia, we are a multi-sided platform that is constructed to establish a bridge between innovation supply and innovation demand. So we have long been driven by the vision that innovation needs a network. It needs a process. It needs a place where innovators, businesses, and investors can meet and exchange ideas and create growth opportunities together. So that's the backbone, that's the core foundation of the vision for Valia. And when I say a multi-sided platform, I of course mean that we have, as I said before, a supply side to the platform, which is startup companies, early stage startup companies, scale-up companies, even established startup companies, if you will, that provide new innovation, new ideas, new technologies, new business models, new ways of doing things to the supply side of the platform. The same goes with universities, where you typically find some of the very early stage stuff on the technical side, so pharmaceutical stuff and other science related stuff can originate out of projects on universities. So that's a source for innovation supply as well for Valia. So that's what we regard as the supply side of the platform. Then we have on the demand side of the platform, essentially large companies that are looking to form new innovation, to develop new products, to enter new markets, to build new revenue streams. And they essentially have a requirement that can be known or an unknown requirement. And we'll come back to that a little later here in the presentation, what that means. We also have investors on the demand side. Investors are, as we all understand, we are in an investment forum right now. Investors are looking for investments. So they're looking for early stage things, basically on all levels of maturity, looking for nice investments. And that's one area that the market is very focused on right now, that there's a lot of competition around deals, around potential investments out there. So the Valia platform can help create a path for that. I just want to quickly touch on the growth strategy. So currently we are in the Nordic markets, as well as a few European markets beyond that. Germany, the Netherlands, just entered into the UK. So the first leg of our growth strategy is to enter those markets, or to stay in those markets and grow our presence in these markets. Among other things, by offering new entry-level subscription models or subscription services to the potential clients of the Valia platform. We're also targeting distribution partnerships to help distribute the Valia platform in a scale that we are not able to ourselves, and tap into already firmed client relationships. Then as leg 2 on the growth strategy, we are expanding to new markets. So as said just before, we have opened up in London and trying to get the London office going as we speak. And in the plan later in the year, we are looking at opening up an office in New York as well. And beyond that, of course, as investing our proceeds from the IPO in increasing our sales capacity. And that's not only direct sales, that this is both high touch sales, but also low touch sales or more product led sales that are going to be enabled through the platform. And then, of course, on a longer horizon, we are preparing to enter Asia Pacific and basically do what we have already done in our current markets with the Asian markets as well. Although there are cultural differences in those markets for sure. The fourth leg is monetizing the supply side of the platform, which is also something that we have been writing about extensively. This is about opening up the startup side of the platform and actually establish subscription services for the supply side of the platform as well. Our current total addressable market, as if we look at the global enterprises and just keep out the investment companies for now, is $7.3 billion, and we have calculated the market by looking at enterprise companies plus 1,000 employees in Europe, in the US, and calculated our total addressable market there. This is total addressable market, not our total serviceable market or what we're aiming to get at. But this is a big market indeed. And then beyond that, we have, as I said before, opportunities to venture in to mid-sized level companies as well as opening up for startups, which represents an entire new market in itself. So it's a pretty big market we are looking at here. Just very briefly about our expectations for the future. Very ambitious annual recurring revenue growth targets over the next 3 years. We are looking at very strong underlying market trends. Everyone wants to access new innovation. Even the large enterprises are talking about this extensively in the boardrooms. This is very important. This is an area where we feel there will be a lot of development and a lot of investment in the future. We also have investors that are struggling to find the right investments at the right time. We also find the Value platform to be strongly suited to take on that trend. We already have revenue streams active on the platform, which we can build from. We are very close on signing up deals with some very big strategic partners. This is also a very interesting part of our growth drivers. We can basically create multiple revenue streams around the multi-sided platform of Value, which is also going to drive our growth over the next 3 years. And then, of course, network effects. The way that these things work is that the more companies we get on board, the more startups there will be on the platform, the better services we will have, and the more value we will create. So this is going to be reinforcing all the way through.
Perfect. Yeah, but thank you for the introduction, Dennis. I will let it over to Kasper to run a little bit through the numbers and the speedometers, and then we will ask the questions to you, Dennis, shortly.
Yeah. So as we also talked about, or you mentioned before, you have a very short period of or historical time in terms of measuring these SaaS metrics. So if you just take the flat or the AR growth here, maybe it's not fair because you have only been listing for a very short time. But if we look forward, you expect a very, very high AR growth, about 280% in 2021. And again, if you really succeed and you are having these very, very high growth rates, then as we look down on the right side of the positive relationship between AR growth and valuation, then you should also be way ahead of the x-axis and be valued very, very high on the valuation multiple. So again, it's more complicated for investors to look at these or a young company as Value, where you can say the historical AR growth and SaaS metrics, etc., are not there yet. However, it is of course something that investors should track and follow. So taking the end 2021 valuation multiple is if Value delivers on the expectations, it is only 8 times AR. So yeah, this is something to follow. But as we also have mentioned with the other companies, there are also other factors to look for when assessing a SaaS company. And here Value is kind of something special in terms of the technology level, where the platform itself is the core edge of the company. And as we see here, the technology level is very, very high. Some of the other metrics are expected to increase over time again if Value delivers on the expectations, and we also have more data to kind of feed our simple framework here. And also the global scalability is in fact the one that will increase the most when the platform is opening up for the startups, networks effects are created, and onboarding of customers are easier. So this is something also that investors should look for. Dennis, you have also talked about the TAM and the future market growth here. And again, this is a very large market based on the existing platform technology, as you have written in the comment description. And there is a huge potential for even a larger TAM if you succeed with your plans, right? So let's get your view on this, Dennis, and try to have these 5 questions answered by you. Maybe you're not agreeing with our assessment right now, but let's see whether how you view is on that. So first of all, how can Value grow more than the market, and also retain the existing customers that you have, and maybe also, again, depending on in which stage you are in the development phase or in the platform, what is your upselling potential going forward?
Absolutely. Yeah, so I'd like to start by saying that there are certainly many companies in the market today that offer databases where you can search for innovative companies, startup companies, investments, etc. However, the Value platform is introducing a new concept, which is what we call innovation workflows, right? So there's a big difference in using a database for searches, on a reactive basis, and then to using an innovation workflow on a proactive basis. So we think of workflows just as innovation workflows just as important for innovation as the workflows are important for digital signature, the sales process and marketing, etc. So we feel we are forming a new category here that differentiates from the market, and therefore carves out a blue ocean for us to venture into. And one of our metrics, at least one, the objective that we're working with is the number of workflows per customer. Because as the number of workflows increases, we will have a more sticky platform, and it will become a process that you adopt into your organization. And that enables us to retain clients on the platform. To your question there, so the idea is also that until now we have had 1-2 subscriptions that have been high touch in the sales process, and that have also been targeting very large organizations with a very large need for innovation, and therefore going for those workflows and then establishing those workflows inside of the companies. But now we are now looking at developing new, implementing new subscriptions, which are lower level than an enterprise subscription. That's a very classic kind of development in any SaaS business, by the way. And this will enable us to have more flexibility around kind of cross-selling and upselling as well. Going from just having one subscription to actually having several subscription services at your disposal.
Yeah. Okay, so we'll go in with a lower subscription based, potentially upselling that later, where you are now offering, because you are very large company. It's limited your upselling capabilities because you are offering a very large platform to the customers. Yeah.
Yes, exactly, and then of course opening up for more leads coming into the business, more opportunities coming into the business, because you can then service one person inside of a company as opposed to having to serve an entire innovation organization. So that's the flexibility around the sales approach.
Yeah, so I think we have some great questions here from the audience. So just before we are going to through them, let's jump to the main question here from our side. Why invest in Value relative to other SaaS companies? So can we get your view on this?
Absolutely, yeah. So I mean, if you are an investor and you believe that innovation in the future is going to be even more critical to businesses in order for them to stay competitive and grow new business streams, then you should invest in Value, because we are forming a category around this, delivering innovation workflows for the market.
Yeah, but that's a really clear cut. If you believe in this future, then there is a possibility here. Perfect. Shall we take some of the questions from the audience? How many customers do you have now in Value? I don't know whether you touched on that, and what grows into those expectations. So how many customers?
So we have today we have 7 subscription customers on the platform, and we also have a number of what we call transactional customers. So those are not on an enterprise subscription in the platform. So, but that they are potential enterprise clients, but they are currently not on a SaaS subscription.
Perfect. And the revenue per customer, I think I can almost do the calculation. That's between 800 to 1 million. So that's the last enterprise you have on it. Can you elaborate a little bit on also, we learned, the investors here, that you should say what does it cost to get a customer and what is the revenue. I know it's hard for you because you're going to change your model on lower revenue streams and such, but can you elaborate a little bit on in the future, what are your expectations, for the customer acquisition cost, and what are your expectations for a customer size, so indicating a payback time. I know it's very early, Dennis, but at least I'm trying to ask.
Yeah, the calculations we have based on the current customer uptake, which is not significant at present time, of course, during the stage of the company. The calculations we have here is that we have roughly 150,000 Danish kroner in customer acquisition cost for an enterprise grade subscription, and this means a company that pays in between 700 and 900,000 per year Danish kroner. So 150,000 divided by that number, you can.
We do the math ourselves. Perfect.
Yeah, you can quickly. It's not many months.
I guess the more down you go, searching for new customers with lower earnings. Is that why you are employing now a strategic partner model? So that's, you will actually lower your cost of getting those customers in. I know, of course, sharing a little bit with strategic partners, but is that a way of the thinking also in the future that your partners will help you bring in customers at a lower price, but then sharing a little bit of the revenue, so it's able for you to have lower revenue customers?
Absolutely. So the partners are typical consultancies that have lots and lots of client relationships already and that provide services. So the Value platform will be a bolt-on service, just as you have consultancies that are integrating SAP or Microsoft Dynamics or Salesforce. So that in that way we can lower the customer acquisition cost on our side and then tap into their distribution network and access to customers.
And then lastly, unfortunately, we can only catch one more question. The protection of your technology, your advantages. How are you protecting this platform? Are you able to protect it in any way, or is it the head start that gives you a kind of a protection?
Well, I should definitely note here at the very end that we are heavily based on machine learning. So we have implemented practical implementations of machine learning across the platform, and those processes and methods we have invented here are novel, and this means we have a patent application pending right now, which of course we will keep working on and enforcing as we go forward. So I think when you look at our technology advantage, we have to look at the innovation workflows that we have developed, as well as the machine learning algorithms that is incorporated into the workflows.
And that you can, those machine learning algorithms, you can kind of a little bit patent protect.
You can patent the processes and methods that are where your algorithmic intelligence is part of.
Perfect. Thank you, Dennis. Unfortunately, we cannot catch more if we need to stick to the time schedule. But thank you, Dennis, for joining in and taking us through your company.
Thank you so much. Thanks for listening. Have a great day.
And I will just make some closing remarks. I will do it very shortly. It has still been a long day, I hope. The closing remarks here is that I hope we just gave you a short introduction to a lot of companies. You know, there's videos on our website if you want to see introduction and more, and hopefully you can follow them in the future. We also have shown our way of assessing it, the metrics, not telling you what they should be worth, but showing you how they trade. And of course, there's a lot of factors that goes into such evaluation, but at least it's a starting point for this discussion that is what you're raising out there on the First North and all those growth companies. You know, at least now you have a framework for putting it in. Does it start? Where is it? You know, we got a question there, but when you use the USRI index, you know, are there not much bigger companies? Yes, and that's maybe a reason for some of the discounts you are seeing is history, how long has it been on the market, and the size. So of course there's a lot of other things, but at least we hope to give you some kind of a framework on how it's valued, and a little bit also by the speedometers on how you should see it, and how not only the historical, but what could be in the future. Is it supported by somehow? It is not a given facts or anything, but at least I hope you have given that. So I hope you in the future will follow. We will take more discussion on this software as a service sector. It's growing, and I hope you will also follow more closely the companies. And there we will shut up. There we don't say so much. There we will let the scene take. The company takes the scene.
Yeah. So and also as a final remark, some of you are asking whether we are sending the presentations out. We are actually trying to collect all these things that we have made here for a kind of sector report. So we will distribute it on our platforms within a few days, and then you can read and go through them. We have tried to make this simple assessment, and of course with the disclaimers that we are having an agreement and a partnership, you can say, with the companies, or subscription-based model with them. So of course we have tried to make a simple framework here. We have looked into the numbers. The numbers, as before, have with value, are kind of objective in terms of what are the evaluations. However, when we are, as Michael said, comparing it with the SaaS sector in US, there are some obstacles, or what you can call it, in terms of companies that are larger. We haven't deducted cash. Some of the companies we are comparing have more debt, maybe, so we could take an enterprise value in terms. But we have tried to make a simple presentation here to get, or to give you a larger understanding on this. But we think it's a valuable sector, and something that investors really should focus on, and also follow in the future. Especially if you are a First North investor now, you see that we have a lot of them, and maybe there will be much more in the future.
Probably, yeah.
Yeah.
But thank you very much for listening in.
Thank you.